Today's Real Vision Daily Briefing is brought to you by Chintai, your partner in asset tokenization. Licensed and regulated by Singapore's Monetary Authority and powered by the innovative CHEX token, Chintai offers a compliant, one-stop solution for bringing real-world assets on-chain. Chintai enables the tokenization of virtually any asset, from carbon credits to corporate debt, private funds, and real estate, enhancing liquidity and optimizing efficiency for all.
The technology becomes largely invisible and seamless to the end user. I can take a selective store of value within a wider portfolio in a fairly liquid form, very efficiently, to anything, whether it's some high-value whiskey, whether it's a particular supercar that's a one of three limited edition, therefore, in this fungible trading of them in a liquid form is the true end game here for tokenization.
With billions of dollars in client deals facilitated, explore how you can take advantage of tokenization by visiting realvision.com/Chintai. How do we navigate the AI trends? Hi, everyone. Welcome to the Real Vision Daily Briefing. I'm Maggie Lake, and today we have an embarrassment of riches. Raoul Pal, co-founder of Real Vision, David Mattin, author of New World, Same Humans, and Imran Lakha, founder of Options Insights, are all here with us.
You've got all the English. You've got all the Englishmen today. It's the British invasion. It's happening.
It's the British invasion. The British Brain Trust is here with us, and we love it. And just in time, right? I think the great thing is we've been watching. We had such a great start to the year, and then we've just been watching this kind of volatility take hold across the entire investment landscape, I think. But we've certainly seen it in risk assets, and so. I know this is, especially when we're talking about technology and some of these exponential trends that you all look at in the exponentialist, because you're all a part of that product that's on the RV marketplace as well. How do we sort of make this all fit together? I think we're all struggling. So let's try to break it down a little bit. And, today is a perfect example, right? We saw stocks sell off, is really bearish close yesterday, all the confusion around the Fed. And then today, now stocks are up, but what's going to happen? We have jobs, we have earnings still coming out from technology. So there's just a lot of cross currents. So Raoul, I just want to kick off with you. And we have seen these air pockets across risk assets, whether you're looking at some of the big tech names or you're looking at crypto. How are you thinking broadly about the market action right now?
So for those of you on the Real Vision platform, look at the update that I did today. Those of you on YouTube, go across to my YouTube channel, Raoul Pal, the Journeyman. There's an update there for you. But essentially, if we think that liquidity is the biggest driver of risk assets, and particularly growth assets, crypto and tech are growth assets. If you remember, they led the cycle because they're driven by liquidity and not the business cycle itself, which is what drives stuff like the Russell 2000 or oil companies or gold miners. They're all driven by the business cycle. And we see that right now, the ISM is struggling to turn higher, and then we'll have an upcycle, and those stocks, those cyclical stocks, will do well. But technology way leads that by over a year. And if it's driven by liquidity, we need to understand what's happening with liquidity. And Mike Howell was with you last week, I think. Mike's always excellent on this. We produce a lot of work at Global Macro Investor and Real Vision Pro Macro on this. And it's liquidity in the US at its simplest level is driven by, it's called Fed net liquidity. It's driven by the balance sheet. Is it rising or falling? Well, right now they're doing QT, so they're taking liquidity out of the system, but that's offset with the reverse repo. They've been draining that. That money goes into the market, into the short end of the bond market. That's been adding liquidity, and that more than offset the Fed. Then there's Janet Yellen and her checkbook, the Treasury General account. That's her current account. And we had this liquidity withdrawal from the system based on the fact that there was a reasonably big tax season because the economy grew reasonably well last year. Those taxes come out of money market funds and go into Janet's checking account. So they're now not able to be used because Janet's not spending it yet. So that money comes out of the system. That's a liquidity withdrawal. Okay, so that's what was driving tech down and crypto down. Then what happened yesterday is two important factors. One is Jay Powell said, hey, listen, guys, we're not quite ready to cut rates yet. We're definitely not going to raise them, though, but we're going to do less quantitative tightening, but a lot less, from 60 billion down to 25 billion. So that's if you think of quantitative tightening as the Fed putting its head on the beach ball, you take it off, it rises. He's allowing liquidity to come. On the other side, Ellen said, well, what I'm going to do is I'm going to buy back some of these illiquid bonds at the long end of the bond market. Those illiquid bonds, that's just a recycling of liquidity into a less liquid part, but it's adding liquidity into the system. So both of them signaled, we want to add liquidity here. So that was good. The Japanese intervened. They're selling dollars, selling of dollars, intervention of liquidity. So there was a lot of liquidity came back in. And the point being is what we saw with the markets drawing down was liquidity coming out. What happened today and yesterday in crypto, it kind of figured this out immediately, was liquidity is coming back. So that's really the big driver here. As I've said in the everything code work, is all of the central banks have to fund their government's debts, and they all have to work together, and they all have to get interest rates lower, and they all have to put liquidity in, because if not, the numbers don't work. And so that is the game that's actually at play here. Everything else is basically noise.
Yeah, it's funny because that press conference yesterday, when everyone was expecting Powell to be hawkish, and then he came out and he wasn't, everybody was like, okay, wait, that seemed like the most obvious time that was sort of coming to the surface. Like they can't afford to be.
He's not looking at inflation. Him and Janet are going, we've got 10 trillion of bonds to refinance. How the fuck are we going to do that?
Yeah.
We can't quite get the excuse to cut rates yet. So we're going to have to add some liquidity in here somewhere to get somebody else to do it.
Yeah.
And that's what the game is. The whole game for them all is the same. For the Japanese, the Chinese, the Europeans, the UK, and the US, it's all the same game.
So you don't sound overly worried. And by the way, there's a treasure trove of deep dives. If you're a little bit lost with that, there's a treasure trove of deep dives explaining all of this across all over the place on RV. And however sophisticated you want to be talking about it, we've got a place where you can understand what Raoul was just talking about, liquidity and how important that is. David, another question for you is, and this has come up a lot too. So let's just hone in on the sort of technology area. They were the high flyers that really drove this market. When you're looking at equities, there was so much enthusiasm around it. And we had the help from treasury yields coming down, but it was also sort of, layered on this narrative of this AI revolution, NVIDIA. I mean, probably everyone listening to this probably has NVIDIA in their portfolio. Wish they'd got in early on it, but probably have some holding of it. Have we just is there exhaustion around the AI story? Is it over? Was all the good news priced in? How should we be thinking about that? Because we get a lot of questions about AI. Is it overvalued? Is it overhyped?
Yeah, I sure hope everyone's got NVIDIA out there. That they'll be kicking themselves if they didn't have it. I mean, look, first, it's very, very far from over. It's barely beginning, and that view is at the heart of the exponential age thesis. It's at the heart of so much of what we talk about inside the exponentialists, and Raoul and I we've talked endlessly about this. Machine intelligence is going to be a transformational force for the decades ahead. It's going to rewrite so much about the economy, about society, about the state of our scientific knowledge. That's the big long-term directional thing to say. If you put your ear to the ground inside tech at the moment, if I listen to some of my friends inside big technology companies, I think we're at a really interesting phase for this wave of AI advances. And Raoul and I were talking about this in our fireside chat a couple of days ago inside the Exponentialist. Obviously there was an incredible burst of excitement around ChatGPT and OpenAI, the large language model advances we've seen, totally legitimate wave of excitement. They're an incredible quantum leap forward. But now we're entering, I think, something of a new phase. And that phase is about two things. OpenAI and Microsoft have to prove that this technology is useful, and that means scaling into the enterprise. That means getting 200,000 consultants at KPMG to actually understand this technology and integrate into their workflows and become more productive with it. That is difficult. It's difficult putting Microsoft Copilot 365 across Office and getting everyone inside Morgan Stanley to really use that and understand it and all the rest of it. So, reality sets in there. And the second big component of this new phase is more about the underlying technology. I think there's broad agreement, and the AI community just, it's like the crypto community arguing, they will argue to the death about this, right? But I think that, so, maybe I'm going to get, please bring it
hate
on.
mail.
Okay?
You're going to get hate
my
mail. You can't
personal
help
view.
I'm probably going to argue with you, David. So
yeah,
we had a
Raoul
discussion
can
in the
step in a
exponential,
second, right?
and this is
Yeah,
where
hold your
Imran's going to
horses.
come in useful. So we'll come on to this.
Yeah. My personal view, right, and it's shared by some very heavy hitters, inside the AI community, is that we're hitting the limits of what you can, any further advances you can get just by scaling the kind of AI models we have, the kind of transformer models we have. We're going to need further advances before you get to sort of AGI-like truly magic machine intelligence, and that will take a little bit of time. And what I'm saying is that will give a chance for the inevitable technology cynics, just like the crypto cynics, they're always out there, right? It will give them a chance to be in the ascendancy for a while. And what I want people to understand, and this is where Raoul and I are in complete agreement, keep your eye on the long-term secular mega trend here. Don't listen to some of the noise that I suspect is coming, because there are just some temporary difficulties, because we will figure out how to be more productive with AI. We will make those advances, and it's going to be directionally so incredibly powerful. But I think even some of the movements you see in the market the last few days, like off the Meta earnings call, when Mark Zuckerberg dared to say, we're going to spend lots of money on this and it will take a little bit of time before it's profitable, and the market didn't like that. You're seeing some of that reality setting in now and the market responding. I'm not a person for very short-term movements. I'm a person for believing in where things are heading directionally long-term. And my conviction around AI is just beyond strong. And I know Raoul says that.
Yeah, and so this is an interesting thing. So David's more concerned now than I am. Just that the narrative has got ahead of itself. I think narratives, when they trend, tend to get completely out of control bananas, particularly with something like this. But I want to bring in Imran here, because this is where options are actually pretty useful.
Yeah.
And Imran has joined us in the Exponentialist to help think through how we can hedge risk, gain exposure, or do interesting stuff with options. And here we've got a long-term view, Imran, which is like, let's say Microsoft's going to continue to go up because of AI, or let's use NVIDIA. Mm-hmm. But David's worried it's a bit shaky in the short term. I'm not. How can we think about doing stuff around our position in the portfolio?
Sure. Yeah, so this is a classic case of, this is something I flagged to David 3 weeks ago, I think it was, that Microsoft was looking very stretched. And a few names had got pretty stretched. Microsoft, Amazon, they were trading at their highs, very overbought levels, and earnings were coming up in a couple of weeks. So it was, if you kind of think this thing's a bit overcooked and need some sort of pullback or correction, but you like the trade long term, what do you do about it? So that's where options give you optionality to do something about it, right? So you can buy yourself a bit of put protection. So buy a downside put that will increase value if the stock goes down, but then you can sell an upside call to finance it and end up not spending any actual premium. And what allows you to sell that upside call is the fact that you're long the stock already. So even if the stock does go up, and if it goes through your strike, then sure, you're going to give up your stock position. But the idea is you'll still be able to buy that stock position back later down the line if you want to. It's just that between now and the expiry of your option, which might only be a month away, you're saying, you know what, I'm happy to take 10% further upside in a month if that's what the stock wants to do, and I won't have any more upside beyond that. But if the stock does correct, then you've spent no money to then capture a load of P&L if the thing does correct. And we did
And
see corrections. Sorry, go on, Aaron.
So people who aren't so familiar with these strategies, can you just quote them as a single strategy, or do you have to do the call and the put yourself? How does somebody do it? Somebody's got a brokerage account that they can trade options on. How the hell do they do something like that?
Yeah, it's a combination strategy. So it involves two options, but you can execute it in one go. So in any decent options trading platform, whether it's something like Interactive Brokers, I think Tasty Trade is another one, but you can put multi option strategies together, and that's a very simple one. Just buy a put of a certain strike and sell a call of a higher strike of the same expiry, and it just works out what the net price of that is, and then you put in your order for that combination. So it's either, we call it in the UK, we call it risk reversals. In the US, they're called collars or combos. But yeah, you can execute that, and you'll get a decent tight bid offer for names like these big tech stocks that trade like water. I mean, you're gonna get a nice tight price in something like that. So very, very easy to trade. You do need to post margin against these sort of things if you have them in a separate account to where your actual stock holdings are. So this is something that people sometimes get wrong and get confused about. So if you're holding your stock in your like tax efficient portfolio, call it a Roth IRA or whatever, and then you've got a brokerage account on Interactive Brokers where you're selling calls and saying, oh, I'm short the calls against the stock, so it's fine. Your brokerage account doesn't know that because the stock doesn't sit in that brokerage account. So you will need to have margin that you can post in that account to cover the fact that those call options are going to increase in value if the stock does go to the moon. So just be aware of that and kind of know what your actual margin call risk is.
I'm just going to interject, Raoul, before you do that. I'm just going to interject. If you are not doing this right now and you feel like you're slightly losing the plot, hang in there. On the RV platform, we have a whole section from Imran on the Academy about options, so you can take your time and walk through it. And he does all kinds of stuff in AMAs as well, where you can sort of actually talk to him about learning. So there's a whole education journey with Imran on the RV platform. So don't feel like you're not going to be able to get this, but it's super important, because if I'm hearing you, and this is always the thing, right, Raoul and David, it's like, Raoul, everybody knows your horizon, because you tell them all the time, even though they forget, is like 10 years, but might be 6 now because you can't see beyond 2030. But there's a whole, these are very long-term trends. And David, you're looking at a really long-term exponential trends, these big narratives. But Imran, this is really important. You got to survive today and in the short term in order to be able to capitalize on these big trends. And so this is super interesting to be able to figure out how to navigate that in between if you do have that long view.
And also, I still have a daily charts up. I look at stuff all the time. I know where everything is, what's overbought, oversold. I just don't need to hedge the risk. I'll accept the volatility, but other people do. But people should bear in mind is more people are trading single stock options on tech names than the S&P 500.
Mm-hmm.
Right? It is the single most active market in the world, is the single stock option market on tech names in the United States. So this is not like trading Eurodollar options or SOFR options or whatever it is. This is the biggest market in the world, and people need to understand how to use it, because it can really help you. It's not just for wild speculation. It's the stuff that Imran spends a long time thinking about, is how do you maximize stuff, or as you're talking about, Maggie, how do I just get more comfortable with the risk that I've got because I don't really like drawdowns or whatever it may be. So
yeah,
that's
no, absolutely.
Yeah.
We and I know you've done things with Jem Garcon, Imran. He said at one of our RV events that options are swallowing equities. So this is something we need to know about. Period. End of story. Whether we didn't or not. And so it's important to talk about. David, want to ask you a question that Dan posted in the chat. I get that AI is massive, but does NVIDIA not just become a box shifter in time?
Become a what?
A box shifter. I
Oh, a
thought
box
maybe
shifter,
you know
like
what. I think like
commoditized. Yeah.
yeah, come on, like
I
right, just a middleman sort of,
yeah,
yeah.
I get that. It's doing incredible work to ensure that doesn't happen. I mean, Imran and I were talking just before the call. I mean, why have AMD and others corrected slightly? I think that's partly, my view would be that's partly because the NVIDIA's dominance of the high-end AI chip market, it feels so strong right now and not very vulnerable at the moment. It's just in such a powerful position. But yeah, look, sure, that can't continue forever. Competitors and insurgents are going to eat into that dominance, and we're not going to have this insane shortage of high-end AI chips forever. But NVIDIA are building an incredible moat around this hardware and this AI compute capability. It's CUDA kind of software platform that allows AI developers. It's the most powerful sort of AI development platform on the planet. And then, of course, it's like an Apple ecosystem strategy. It's locking people in to the NVIDIA ecosystem of chips and software and development platforms and all the rest of it. I mean, I'm writing about AI and the life sciences this month for the Exponentialist. They have an incredible, like everywhere you look, NVIDIA has a thumb in that pie. Do you know what I mean? They've got this incredible suite of generative AI models for drug discovery, new molecule and protein synthesis. So it's using its early lead to build an incredible moat of intellectual property and software and AI models around it. So I don't think it become so yeah, like the high-end AI chips it's shipping now become boxes in 5 years, sure. On the other hand, it takes that money and it's investing to stay ahead on the AI chips that won't be boxes, and at the same time it's got this incredible moat of software. So I don't want to sound hyperbolic about NVIDIA, but it just is in a very strong position right now. Jensen has played a blinder. There's no denying it.
Raoul, Shafiq asks, have you watched Sam Altman's presentation at Stanford yesterday? Do you have an opinion?
I haven't watched this one yesterday. I watched pretty much everything he does because I try not to listen to what he says, but listen to how he's saying and the context that he's giving. And this is what a discussion David and I have had at length that we go backwards and forwards on, is every time I listen to Sam Altman, his guarded manner of speak suggests to me their advancements internally within OpenAI are much further than people understand. It is my personal opinion that they are building AI software products with AI, which is why 500 people can be so fast across so many verticals and disrupt everybody every 3 months. We're going to have the OpenAI developer conference in this month sometime. My guess is and this is where David and I have been discussing this, my guess is going to be another step change. And every time, it was really interesting. I can't remember who was interviewing him, Lex Friedman, somebody. And somebody said, oh, that was a shock when Sora came out. He said, damn. He said, we should have throttled back a little bit because we don't want to shock people too fast. Which makes me think, and I hear this language from a lot, he's super guarded. And what he's trying to play is a game of beating everybody, but not moving so fast that the regulators shut him down out of fear.
Exactly.
And then he's saying, you need to regulate us, but he's moving so far ahead. It's a very clever game he's playing, as are others. Anthropic are doing the same. They're like, you've got to protect everybody from the AI, but we're great. And
right.
We'll be okay.
Protect against what you know. Meanwhile, we're doing a bunch of stuff that no one knows about.
For those people who, there's another big discussion. We won't have the full discussion now, but this is so important. There's one company that David presented at the Global Macro Roundtable in Marrakesh week before last, TSMC, that is so important that nothing gets manufactured without literally nothing. And that is Taiwan. And this is what the whole China-US clash is about. It is so important that it's geopolitical. And we think there's going to be a resolution. I will write a bit more about it in due course. But this stuff really matters in the game of nation states. And it may even matter more than oil did. This is how big and important this is. And
absolutely,
we think some of these companies are big now, Microsoft, Tesla. I mean, Tesla's a whole other story.
Well, I was going to pull in Imran on this, and feel free to drop anything in the chat if there is sort of a tension between the long term that you like with the short term issue you're having with stocks, because this is what comes up. Tesla's another one of those, Imran. People are, maybe they're bullish, maybe they're, Elon devotees.
Well, I bought some for the pro macro. We bought 1 year calls in Tesla when it was absolutely puking. And we just said the market is pricing this like a car company and there's a lot more coming. And the calls were pretty cheap considering the payouts you could get if it's right. So Imran, what would you do? Let's say you want to get long Tesla and it's puking, you're not sure about your entry level. How would you look at that? Would you buy calls or would you sell some puts because vol's up? How would you think about it?
Yeah, I mean, vol was pretty elevated going into earnings as it normally is, and people were really bearish on Tesla. It had been trending down for quite some time, from like 250 down to 140. I think it got down to about 140, maybe even printed just below that. So that was a bit of a layup for people who were underweight Tesla, who had room to buy, to just sell some puts at a really expensive vol. But the only problem with doing that is you're only going to get your premium. So if the stock does rip 30% in a week like it did, then yeah, you got a little bit of premium, but you didn't actually participate in that much of the move. So you got to kind of be aware of what you're doing and what the upside of your trade is. So yes, the high probability trade was to sell optionality that was expensive and was going to reset lower on earnings. But if you actually believe Tesla was going to rip that hard, that fast, then with the premium that you're collecting, you would have wanted to then buy a call spread or something, spend that premium on some upside participation, and that would have been the winner of a trade in hindsight for that particular event, to catch the bottom in Tesla, because vol was elevated. You're doing essentially a long delta, i.e. a trade that gets you long Tesla, but you're net seller of vol in that trade, and the vol got hit obviously because of
and
earnings.
that's a nice way of adding to your position. If you've got conviction, it's been selling off. That kind of way is just a nice way of participating. You've got the upside. You can then flip into the stock, and you then just keep going. So you've got
the beauty about options is, you can restructure those as you go along based on the conditions of the vol surface. So when the vol's super elevated, you're going to do a short vol trade, and you're buying the stock essentially by selling puts and buying call spreads. When you get the rally and you get the vol reset and you've cashed in on some of that short vol position, you can now look forward and say, okay, the entire curve has shifted down. I'm going to take some of the money that I've made and then roll it into longer dated upside that has reset lower by 5 or 10 vol points. And now I've essentially got myself into a free trade for the next 6 months if this thing builds some momentum. And the thing that we do Options Insight is we monitor how the skew's moving around and what the signal is inside that to get a feel for what the option players are doing. And when we were heading down to the lows, there was very much a put skew on Tesla. I think it got as high as like 6-7 vol points for puts trading above calls, whereas that has completely flipped round the other way now after the rally that we've had since earnings and since they came out with that potential approval in China. So now we're running at a call premium on the skew. So it's showing you that the options market is now repricing where the tail is on Tesla from the downside to potentially it going a lot higher.
Imran, what is the options market telling you about Apple? Because we're expecting their earnings. What's been happening with Apple?
Yeah, so Apple's interesting, and this is something me and David were talking about, because I think Apple's the forgotten tech name, because it didn't have the AI story. It was doing all this nonsense on EVs, and now it's suddenly pivoted, and it's been left behind. So they've got this conference coming up in June that I keep banging on about to all my subscribers. And it's like, I don't think the earnings is the event. I think the conference is the event. And actually, there's an massively inverted curve on options where Mayvol's obviously pricing in some 4 or 5% move on earnings. But if you look at June Vol that captures that conference where they're going to unveil their kind of AI strategy or whatever, that's not pricing any Vol premium at all. So for me, the no-brainer trade on Apple is to buy May-June calendars, call calendars, where you buy June calls and you fund them with May calls. The May vol is going to get annihilated tomorrow, and you're probably whatever the stock does, whether it goes up or down, that May vol is going down. But the June vol probably holds a bit of a bid for this, what will become an event that the market will wake up to in a couple of weeks.
So I think this is a perfect example, and I kind of see what you guys are doing with the exponentialists now, because I'm gonna ask you, David, now, given the setup, oh, wow. Also, a headline coming across, Apple announces largest ever $110 billion share buyback. So we'll see what that has to, used to be tech bought back shares and people said, you don't know what you're going to do with the money. That's not a good sign. Shouldn't they be pumping that back into their AI amazing thing they're going to unveil, David? Or is that just because they have so much money they can afford to
so much money? They've got more.
Yeah, I mean, I used to write years and years ago about how Apple had just sort of basically an infinite pile of money, so much they didn't know how to repatriate it, and it just sort of stretched to the moon 7,000 times. But the event in June, and Imran is totally right. I mean, the event in June is going to be huge. You know, the markets may have slightly forgotten about Apple, but you know, tech people haven't. Apple is notorious for being a perfectionist company. It doesn't necessarily put a high priority on being first, but it puts a high priority on perfection and perfecting the customer experience. And everyone inside technology, and again, Raoul and I've talked about it endlessly, have been waiting for Apple to make their big AI move. They've built out incredible AI capability at the edge on their devices, you know, on their phones, on their laptops across the last 2-3 years. The chips on those devices are hugely powerful. They're made by TSMC, leading edge process nodes. They can do AI on device. You know, what are they going to do with it? And the big thinking, of course, is there's going to be some kind of huge upgrade to Siri. I mean, calling it an upgrade to Siri is really to diminish it. You know, essentially a virtual companion fueled by a large language model, the kind of AI wizard that we've all been dreaming about, that knows everything about you, you know, can talk to you as your counselor, your friend, your guide, all of that. So I will be putting Imran on speed dial. In fact, I'll be going to Imran's house. We'll be like putting it on the big screen. You know, as soon as that,
going to be an exponentialist,
as soon as
favor, huh?
he's on the stage, Tim Cook's on the stage, we'll let everyone know what's going on, because it's going to be huge. And the word on the street is that the AI announcements will come this June. That's why everyone's so excited.
Except it's not reflected in the options market.
No, the bull market,
Imran, right?
the bull market, the bull market's pricing nothing on that part of the curve. Very little. Like, it's so small that it's not even worth talking about, I'd say.
So it's going to be, AI has not been on the news flow recently, but between the OpenAI event and the Apple event, it's going to be AI-tastic all over again. And everyone's going to have their jaw to the floor yet again. And people have forgotten this, because the news flow is so brutal. It's so crypto. I mean, the other one who's out today will be Coinbase.
I think it's out already, but I don't have it in front of me. But somebody in the chat, I always say this, if you're watching on YouTube, you got to get on the RV chat. There is a huge amount of information, which is why you keep seeing me look down at the screen. And I'm not going to get to all this good stuff, but there's so many good, both comments, commentary, and questions. But somebody did say they thought it came out.
I haven't seen it yet, but you know, Coinbase is in the exponentialist portfolio as well.
Stuart said they beat on revenues, trading down after hours, but I'm not sure. That was a few minutes ago, so I'm not sure if we need to update that. Thank you, Stuart. I don't know where he saw that though, so check it yourself.
That's been one of the best performers in the portfolio as well, Coinbase. You know, it's a great company. The quality of people there are astonishing. Their monopolistic power is huge. You know, if you think OpenAI has monopolistic power, well, Coinbase has monopolistic power in crypto. So really interesting company as well.
I just want to flag a couple of the themes that are coming up, and we have a specific question for you, because I think that these are all things that you talk about in the exponentialist, which again is a product on the marketplace. And Nick is asking, how does the energy requirement needed to run the AI systems factor into your view? Do you see energy names as a play on the AI transition? I think David Raoul.
I'm going to start with this one. Is even Elon Musk has said the need for electricity. Sam Altman said, everybody said, we don't have enough electricity to run the kind of machinery that we need to run to do this. I don't take that as necessarily a fossil fuel bullish scenario, because I think that if you see what is happening in Europe and elsewhere, I think there is a massive push to run the energy from different sources, because it's geopolitically difficult with oil. People don't like the volatility of the oil market. In Europe, we're seeing obviously the massive drive towards solar and wind and geothermal. In the US, both Amazon and Microsoft are already moving towards nuclear, which David's talked about a lot. So yeah, I mean, David spends a lot of his time thinking and talking about what it means for energy. I think, generally speaking, there's a much bigger revolution that's going to be happening outside of just the fossil fuel revolution. David, do you want to talk a little bit?
Yeah, I think, David, you are, I saw one of your posts, you are looking at this energy part, aren't you? This is something that you're touching on in the exponentialist.
Yes, hugely. I mean, one of the big sort of foundational models for understanding that we've built inside the exponentialist is this idea of a foundation layer to the exponential age. And the foundation layer is made of energy, compute, data, and intelligence. We say that machine intelligence becomes foundational in the decades ahead. And energy and intelligence fall into this really powerful sort of symbiotic flywheel type relationship where more energy is going to allow for more AI. And because more AI will allow us to manage a very complex energy network, it will allow for more energy, and round it goes. So yeah, energy is a huge part of the machine intelligence story. That the questioner is right to raise the question of where's the energy going to come from? Because just like Raoul said, again, people are all in agreement that the energy demands on compute, the energy demands to train these models, and then the vast amount of so-called AI inferencing that's coming, using these models, making calls to these models, like when you write a prompt to ChatGPT, that's going to be absolutely huge. I mean, again, just like Raoul, it's habitual for me to sort of try to live in the future. So I look to where this is going. I don't think where this is going is fossil fuels. I think where it's going is a basket of renewables and nuclear. And I did a big piece of work on nuclear for GMI. I don't know, what was it, around a couple of months ago. And you see again, as Raoul said, the really interesting symbiotic relationships growing between big tech and nuclear. You have Amazon essentially buying a data center right next to a big nuclear plant, and they're going to use the plant to fuel the data center. You have OpenAI's relationship with Helion, which is all about fusion energy, the next step of nuclear energy. So yeah, that's a huge emerging story. And you've got a really flourishing ecosystem now of nuclear startups. Nuclear has been in the doldrums, as we all know, for 30 years, but now you have small modular reactors. They look like sort of big shipping containers. You bury them under the ground. Microsoft and Alphabet and Amazon Web Services, all of that, they want to get these small modular reactors, bury them in the ground next to the data center and fuel it that way. That's what they're going to do. That's where this is heading.
So again,
it's a huge story. Yeah,
I think this is so important, because if you have to be looking at the future so that you don't make mistakes or misjudgments. It's all probability. There's no guarantee, but misjudgments about making these connections. That was such a smart question to ask, by the way, because we have had some people in this sort of, let's call it medium term, not the day trade, but a medium term, say, oh, okay, well, it's going to be an energy suck. We know that. So energy is a good way to do it as a proxy. But this is the important thing about sort of keeping up with what's happening with the future, because it's not maybe that's not the case. That's so important for that narrative, that focus.
Doesn't mean energy stocks don't go up because we're going to be through the business cycle. As the business cycle goes up, there's more industrial manufacturing, stuff goes up. Will you make more money owning oil or carbon allowances in the EU? You'll make more money owning carbon allowances. Will you make more money potentially out of uranium than owning oil? You'll probably make more money out of uranium. That's how you got to think of this stuff. Is where do the opportunities lie? Like, nobody likes solar right now. Okay, well, that's interesting, because we're at the bottom of the business cycle. So all we're going to see is demand coming. So if you're looking for value stuff, look at all the solar stuff that got beaten up. Maybe it's going to outperform some of the oil stuff, which is more looked upon by most investors. So that's how I think about it. It's not a negative oil comment. It's just like, we're in this to make money.
Yeah, where's the opportunity?
Where is the opportunity? Where's the relative opportunity? One thing versus another, because you always want to choose the fastest asset in a particular theme that you're in. If not, you're just doing yourself a disservice.
Yeah.
Now, if you can't manage the volatility, well, that's where Imran comes in. Imran can help you manage the volatility of running these faster races. And that's why his option insight service is so good, because it gives you these kinds of understanding about using options to manage risk or to take risk. And that's why we're trying to put this whole thing together here, because look, we think this through in more depth than pretty much anybody else in any other research service, but it's still approachable. And we brought Imran on to make it applicable to those who don't just, like I said, it and forget it. Because actually a lot of people love the adrenaline of trading, and tech stocks can be quite fun to trade.
You know what's really interesting about what you guys were just talking about in terms of oil relative to things like uranium, and you didn't touch on copper. But again, the vol market gives you clues. So for example, recently, copper vol, uranium vol, they've all been very elevated relative. And guess what the cheapest vol is across all of commodities right now? Oil. So it's almost like oil's kind of in the doldrums and is not really reacting. And I was surprised by this, because even on the geopolitical scare that we had between Israel and Iran, you had gold going to the moon, but oil wasn't really ripping in with any velocity, and oil vol was actually staying quite suppressed. So it's funny, there's these little clues that you get in the vol market where the action really is. And right now, copper's going somewhat parabolic because people are talking about the green energy side of that, and also the fact that China's having a bit of an uptick now as well. And generally, when China goes, copper goes, right? So it's, that's why I think people want to have a look through that options lens, because there are clues there as to where the outsized moves and where the big sort of more medium term trends are going to come.
And that's the other thing about the exponentialists, is there's a fourth part of this, which is Julian Bittle helping with the
Gosh, we almost forgot to mention
cycle.
Julian.
Yeah, and he does the whole technology cycle. So it's a stripped down version of the business cycle analysis we do for Pro Macro and for the macro investing tool, specifically around technology and crypto, which form the basis of what the exponentialist is around. So we kind of extrapolate all the noise that you don't need to know, because if you are interested in the technology and the exponentialist, you don't really care what's happening to value stocks or what's happening to the oil market or what's happening to that. What you're interested in is, how do I leverage this technology bet the best way? And that's understanding where you are in the cycle. And that also reduces risk. So as the technology cycle eventually turns over at the end of 2025, early 26, we'll make decisions about, do we take some of these stocks out of the portfolio, or do we unleash Imran to figure a way of keeping them in the portfolio, because we don't think it's going to, it could be a year of down 20% sideways trading, in which case maybe there's other things to do. And that's why I really love getting the four of us together, because look, this is a very exciting area. Nobody's covering this stuff in the same way. We think it's very, very important. And most importantly, I actually think we got 6 years before we have no idea what's about to happen because of the economic singularity. And this 6 years is the 6 years to make all our money. And if we don't, I think we're going to go into a world where we have no understanding of what it's about.
I think Raoul just likes to say that on the show, so I almost fall over and die every time he does.
I mean, I don't know if
I'm just saying,
I'm going to explain this a little bit to people,
so good.
because this is wildly important. I've explained to many people that GDP growth is driven by population growth, productivity growth, and debt growth. Debt growth stopped in 2008. It's now just repayments of old debts. Population growth is slowing down or shrinking across the entire Western world, plus Southeast Asia, plus China. So we've got slowing growth, we've got massive debts. That's the big problem we're in. And they've been debasing currency to deal with it. But we have AI, which is infinite human mind knowledge. David writes about this a lot. It's going to be, knowledge is going to be like water. It's going to be free and ubiquitous. The robots, whether it's Optimus, whether it's Figure, whether it's whatever else Amazon is using, are going to be everywhere. A Tesla, after all, is just a robot, a car robot with AI in it. What that means is you have infinite population growth in an economy. Infinite population growth means, what the hell does that mean to GDP growth? And if you lower the cost of electricity that we talked about earlier, you increase productivity growth. So you start to get bananas outcomes with the economy. What happens when AGI comes, the all-seeing, all-knowing AI? What are financial markets at that point? Surely the AGI just wins all financial markets. What job does Imran, myself, David have in that world? We don't. What does it mean for your investments? What does it mean to run a company when everybody can just copy your business using an AI or an AGI instantaneously? When you could say, hey, look at this website, repeat that, it'll do it. Why do we even need humans to make the decisions when you just give the AI the role, hey, you're an AGI, figure out how to make money? Right? It's so complicated, and this is coming really fast. By 2030, I think we're coming into a world that nobody understands, and economic models will not work anymore. I don't even know what money is in a world of infinite abundance. Now, I'm not saying 2030 is a doom date. It'll be a process by which we get there. But by 2030, things are going to start feeling really, really weird. And we won't know why the economy is growing so fast, but jobs aren't growing. Why the economy is growing so fast, but something's not happening right with companies. Why do things feel dislocated? This is what is to come. And I think we got 6 years to make as much money as possible so we can just observe it from the beach drinking a cocktail and not try and scrap it out. Now, I can see Maggie's already thinking, shit, what about my kids? That's what her face has written. What about my kids? As is Imran's. Imran's are young enough, they'll figure it out. And Maggie,
Proceed carefully here, Raoul.
well, he's only got very young kids. All I'm saying is your kids, Maggie, will
be at the epicenter of the storm.
No, I don't think they will be. I think we're at the epicenter of the storm.
Wait, I totally didn't do that, but Raoul just froze.
I think kids grew up digitally.
Wait, this is so funny. Is it just me? No, Raoul's freezing. You're freezing, Raoul, and I'm not pushing a button to mute you. I'm totally not doing that.
I'm back now, right?
You are.
Your kids are digital. They come from a digital world. They are more adaptable than we all are. We're more under threat than your kids or your kids, Imran, who will just grow up knowing nothing different. So I don't worry about that. It's the swathe of Gen Xers who kind of get lost out in the cracks here, and the older millennials who can't really adapt anymore. That it's not going to feel good. On the other hand, the economy is going to be booming, and maybe the stock market's booming, and but in the interim, this 6 years, we can all make money out of this, whether it's crypto, whether it's technology. There's going to be a way to make an extraordinary amount of money out of the biggest technological change in all humanity. So let's just do that. We can worry about tomorrow. I'd rather worry about it on the beach than worry about it in some cubicle office at an insurance company in Ohio.
I have many thoughts about this, but I'm going to reserve a lot of them right now. But I will say that someone just asked me on a Zoom that I was doing why I agreed to work at Real Vision. And I said, because the world is changing and I want to make sure I know everything I can about it, because that's the only way, right? Ignorance isn't a choice in my book. It never has been. So what we do is provide a lot of food for thought across every one of the topics we touch. So we dumped a lot on you today. Options, more important than ever. Imran has not only his own company, he's on the academy, and is on programs across RV. David lives in the future and thankfully, I think, is a bit more optimistic than Raoul.
This is why he hasn't got any hair. He lives in the future. He hasn't got any hair because he's seen what's happening.
He's seen what's happening, but he always makes me feel better. But very seriously, if you want to go down the rabbit hole and really think about what Raoul just said and the changes that might be coming and what you need to understand about that, and then sort of what it means from a chart point of view and what it means for volatility and how you can protect yourself. I think that's what you guys are doing with the exponentialist. Is that right, David?
Yeah, absolutely. You know, we always said that, look, yes, the exponentialist is about technology investing, and we want to profit from these incredible technology journeys that we see unfolding around us. But it's broader than that too. It's about how do we navigate this as a professional? How do we navigate this as a human being? And you know, there are just simple beliefs at the heart of that. We are heading to some kind of economic singularity. There is a great enweirding of the economy that is going to unfold once we have, you know, armies of humanoid robots and near infinite knowledge workers with AI. How quickly do we get there? You know, it feels we're being fast forwarded into that future. You know, no one can know precisely, but we're heading towards it. But you know, knowledge is empowerment. If you can spend the next 6 years, of course, we want to profit from this journey, but spend the next 6 years building your understanding, thinking deeply about where it's heading, what it means for you and your children. Societies and human beings are fantastically adaptable. There's going to be lots that is amazing about the world we're heading towards. And what's so exciting for me about the exponentialist is we can build a community, you know, grounded in that belief. It is happening. So let's seize this moment. Let's profit from it. Let's understand it. Let's empower ourselves inside it. Because like we said when we launched, the alternative is you try and sort of turn away and hold back the ocean. Mm-hmm. You're not going to be able to.
David, here's the question. What do you tell your kids? Or what do you tell your wife about your kids? How old are they first?
They're 10 now. Yeah.
Okay.
Two 10-year-old boys. And like I'm always saying, you know, at the end of this long journey with technology, what is left? What's left is human connection. The only thing that a machine can't do is, well, at the end of this long story with technology, is be a human being. And we will always want human beings to be human beings for us, to see us, truly see us, to commune with us. We'll always want the creative outputs of human beings. You know, how does it feel to be alive, going through this journey as a human being with others? So I try to instill in them adaptability, creativity, the importance of, you know, providing things of value to others. And I really encourage them they do incredible things with ChatGPT already. This is going to be about how can you educate yourself how can you use these AI tools to supercharge yourself? You know, so they've played a lot with ChatGPT. One of them's really interested in coding. He's teaching himself. I can't really teach him. I can code a tiny bit, not much. He's teaching himself to code with ChatGPT, and you can see the acceleration. And look, is he going to use that coding in 20 years? Probably not, because there's going to be an AI that will do it. But he's going to use that capability to take these tools and supercharge himself. So adaptability, creativity, the importance of human relationships, and familiarize yourself with these AI tools. That's because I get asked this question more often than any other question when I go inside organizations and speak. You know, when I go to McKinsey or I go to Disney or whatever it is and talk to them about AI, they listen to the professional stuff, but then when the questions come, it's all, what should I tell my children? And that's what I tell them. Yeah.
And I just want to, because we're almost out of time, I just want to link this back to, so Raoul, you always say this, and we talk about a lot internally, but the mission we have is to provide the knowledge, the tools, and the network to give yourself the best financial life you can. And this is the kind of knowledge we're talking about. And you can get it at whatever level you want at Real Vision, or you can go to the marketplace and have this kind of really go down the rabbit hole, deep dive about these very heavy issues that we're talking about, and optimize protecting yourself when you need to sort of trade and invest around it to make the money. I think that's really important for people to understand.
We talk about the knowledge thing. Don't forget, we pioneered the use on a financial site of having a chatbot. There's the Real Vision bot there. That is ChatGPT 3.5. That's skewed towards finance to help people. I mean, it's there for you. The tools are there. And, you know, I see a lot of questions always in the comment section. What does he mean by reverse repo? And today there was like 3 people replying to that saying, just use the chat bot. It'll give you everything. The knowledge is there. Use the knowledge. We've given you the knowledge, tools, and network. The network is the human bit.
Yeah.
The bit that David talked about. Community. We are social creatures by nature. Yes, we socialize online, but we'll also socialize in person. That's the future of humanity, is, as David says, to be humans.
And
The
to get
rest,
different
we just
opinions,
invent
right?
the
Not
robot.
everyone agrees with Raoul. Maybe I may not agree with some of the things he said today. We'll see. I'm going to think about it. But the important thing is it's testing where the difference of opinion is sometimes where, the real value is and where you can help figure out what's right for you in your framework. So it's amazing. Every time I have you exponentialist dudes on, it blows my mind and gives me so much to think about. And now I'm going to go tell everybody I know the things that we need to be thinking about, us parents. I'm going to go in the RVIP Slack because we're talking about creating a parents channel. Clearly, we have to do that. But it was a really fantastic conversation. Thank you guys so much for coming on and sharing it. I think it's a good time when there's all of this stuff in the headlines for us to take a deep breath and think about where we need to hone our skills.
Fantastic. Good to see you all. And you can find the Exponentialist in the
RV Marketplace,
along with Imran's services there as well, Option Insights, also the macro investing tool, everything else. So just go and
so
check
you can pick what you're ready to hit, but you can get all of it on RV and we'll help you along the journey if you want to leg up to some of this other stuff. So it's great. This was a treat. Thanks so much. I may have to go have a cocktail now. I don't know. But I hope you all have a good night and we'll be back here tomorrow. Take care and good luck out there, everybody. Today's Real Vision Daily Briefing is brought to you by Chintai, your partner in asset tokenization. Licensed and regulated by Singapore's Monetary Authority and powered by the innovative CHEX token, Chintai offers a compliant, one-stop solution for bringing real-world assets on-chain. Chintai enables the tokenization of virtually any asset, from carbon credits to corporate debt, private funds, and real estate, enhancing liquidity and optimizing efficiency for all.
The technology becomes largely invisible and seamless to the end user. I can take a selective store of value within a wider portfolio in a fairly liquid form very efficiently to anything, whether it's some high-value whiskey, whether it's a particular supercar that's a one of 3 limited edition, therefore in this fungible trading of them in a liquid form is the true end game here for tokenization.
With billions of dollars in client deals facilitated, explore how you can take advantage of tokenization by visiting realvision.com/Chintai.